Friends, welcome back to our channel OMSAI Bhojanapalli.
Claim for loss of profit, for which a separate policy will be taken, loss of profit policy. It's not a single fire insurance policy from which this topic is covered. The claim for loss of profit is there only if separate policy has been taken for loss of profit. Under this policy, insurance company compensate you the loss of profit arising from a fire accident. You lose profit because of fire accident. How? Why do you lose profit? Sales lost. So you lose profit because sales lost. Everybody? So thereby what is getting compensated also is nothing but profit on sales lost. Profit on sales lost. This profit on sales lost, which profit? Is it relation to pre-fire or post-fire? Post-fire. Is it GP or NP? GP. Rather than saying GP, it is actually two components. NP plus amount. Net profit and certain expenditures, which is called as insured standing charges. And since it is much higher than net profit, we call it as GP. But this is not a true gross profit what you arrive in a trading account. Clear? So thereby what is getting compensated, we call it as GP on sales loss, which in a technical language called dash sales. Short sales. So what is compensated? GP on short sales during compensation period. There is something called compensation period. Correct? Gross profit on short sales during compensation period. Everybody?
Yes, sir.
Okay. So this gross profit on short sales during compensation period, how to find out? For which first you should know what is compensation period. Compensation period is dash or dash, whichever is less.
Indemnity period or
Reorganization period, whichever is less. Indemnity period means period covered by the insurance policy. Reorganization period means the period affected by fire. Correct? Out of these two periods, whichever is less, for that period only I will give compensation. Correct? I mentioned some period. If you are exceeding that period means I will give you the profit only for that period. If you are just reorganizing yourself in lesser period, then definitely in the lesser period itself, reorganization period only I will give you the claim. Could you appreciate that? Yes. Okay. Then we should be finding out the short sales. How to find out the short sales? Short sales means what? Sales lost. How do you prove this much sales we have lost? Compare it with previous year. Previous year any period? No, compensation period. And that too corresponding compensation period. Suppose it is April, May, June of this year means it should be April, May, June of previous year. So sales during corresponding compensation period of previous year. It cannot be arrived. It cannot be arrived through 12-month sales by 12 into 3, 6-month sales by 6 into 3. You have to identify the information from the question that particular 3-month sales. Correct? Because you should know that by dividing by 12 or 6, you are assuming one thing. What sort of assumption that you should know what assumption you are making. The sales are even. Correct? You are allowed to do that if no other information available. If there is no proper basic information available, then examination allows you to make assumption. But not straight away making assumptions even when the informations are very crystal clear. Understood? So thereby what do we do is, we will make assumptions not immediately when the informations are lacking. Shall we proceed? So sales during corresponding compensation period of previous year, plus or minus trend. Trend means, sir, every year I am not making same sales. Every year there is some increase or decrease is happening. That is what we call as plus or minus trend. Plus or minus trend will give you what? X. This is what I was expecting if there was no fire. This is what we expected if there was no fire. From that I reduce actual sales. I will get short sales. Understood? Now then we require gross profit ratio, which is equal to GP by sales into 100. GP of which year? Previous year. Sales of which year? Previous year. Correct? GP equal to dash plus dash.
net profit plus insured
Insured standing charges. This are also relating to what? Previous year. Understood? All these things are relating to previous year. Everybody, GP equal to net profit plus insured standing charges. Sometimes these information not ready-made available. They will give indirect way. They themselves give GPR, but that GPR don't trust. That GPR is GPR for the purpose of trading, unless otherwise mentioned. Understood? Everybody, so GPR that will be mentioned in the problem mates. It is a GPR based on the trading GP. Based on the trading GP, and if standing charges given, you can find out net profit. If GP and net profit given, you can find out standing charges, of which you can decide which is insured and which is, and finally it is better you make the expression net profit plus insured standing charge will give you gross profit. Correct? That gross profit by sales into 100 will give you gross profit ratio. Understood? Okay, so gross profit ratio. So once you arrive at the gross profit ratio, then it is gross profit equal to sales into gross profit. Short sales into gross profit ratio. So it is GP on short sales equal to short sales into gross profit ratio. This is the first part of the claim. Correct? Coming to the second part, there is some expenditure which are incurred, which were never incurred in the past, which is not covered by insurance policy, only incurred because of fire, which is called increased working expenditure, IWE. This will also be compensated by insurance company, even though they are not obligated to. Why they are compensating, why they are encouraging means this expenditure is made only to promote sales. To promote, if they promote sales, if the businessman increase sales, then the claim of that amount to be settled by insurance company will reduce. Right? And thereby what we do is we will make a settlement even for IWE, but not just like a blanket amount and all. Whatever you incur, I will compensate. Like that I won't tell, only ceiling amount. Correct? What and all? IWE into GP on AAT divided by GP on AAT plus uninsured standing charges. Super. Now what is GP on AAT? AAT into GPR. AAT into AAT into GPR. What is AAT now? Now you should make the point. Adjusted annual turnover, which is equal to annual turnover plus or minus 10. IWE. Once again. Increased working expenditure. IWE into GP on AAT by GP on AAT plus then AAT equal to adjusted annual turnover, which is equal to annual turnover plus or minus 10. Annual turnover equal to sales during 12 months immediately preceding the date of fire. Sales during 12 months immediately preceding the date of fire. Right? GP on Rita. Confusion. That too, these people are not having lots of confusion after the class. So the Rita motto Sariya Puriyala, not understanding. How do I understand more about Rita is what our friends are asking after the class. Don't change my profession. Reduction in turnover. If this expenditure not incurred, definitely I would have lost my sales. Because of incurring this expenditure, I am increasing sales, I am reducing my reduction in sales. I am avoiding my reduction in sales. That is the primary concept behind that wording. Correct? But unnecessary, why to confuse us by computing reduction before, reduction after, that and all we need not compute. What I should compute or what I should be knowing as a student is that very easy understanding is that the additional sales attributable to additional expenditure. What is that? Additional sales attributable to additional expenditure. You incur extra expenditure. Why you incur expenditure? To increase sales. So how much extra sales you made? That is what Rita. While following by additionally spending money, how much additional sales you made is what we call it as theta. But how do I find out, sir? Sales is given after fire, correct? It has to be given. After fire, how much sales given? That sale is actually made because of incurring expenditure. That sale is made because of incurring. See whether another information given or not. Which information, sir? Sales without expenditure. They would have given. Had this expenditure not incurred, the sales would have been this much, and they would have given. If they given, then the sales with the expenditure minus sales without expenditure will be reta, correct? If that information not given, which means I understand if the expenditure not incurred, sales would have been 0. So thereby entire sales made after fire is because of this expense. Thereby entire sales will be taken as theta. Do you remember the discussion? Akka? Yes, sir. Okay, so that was a discussion we had in relation to reta. Reta means reduction in turnover avoided. But in a common sense approach, additional sales because of additional expenditure. Akka? Yes, sir. Then actual expenditure, least of that will be taken for the purpose of claim. Correct? Next we have gross claim. Gross claim equal to short sales plus claim for IWE minus savings in insured standing charges. Savings in insured standing charges. Correct? What is that, sir? Because first of all, GP on short sales, we are computing a short sales into GPR. In the two items are there, net profit and insured standing charges. Then we have IWE, correct? Now in this net profit and insured standing charges, when we are giving a claim, but if you are saving some portion of insured, then you can't have double benefit. Say your employee also left, you are not paying salary. Insurance company also giving you money for payment of salary, no? That is double benefit, correct? So under any circumstances, we can't give you more than your actual loss. Could you appreciate that? We are giving the salary to you because it is expected that you will pay the salary to him. When he is not going to accept the salary, why should I pay you salary? Correct? That is what we call it as insured standing charges. So gross claim will be GP on short sales plus IWE claim minus savings in insured standing charges, which will be given in the question. Gross claim over? Net claim. For that we should know average clause is applicable or not applicable. Average clause is applicable or for that we should compare policy amount with GP on AAT. If policy amount is more, then no under insurance. If the policy amount is less than the GP on AAT, then it is said to be dash underinsured. If there is underinsurance, average clause is claim equal to gross claim into policy amount by firefighting expense may be claimed along with loss of stock or maybe sometimes with loss of profit. If it is claimed along with the loss of stock, here we will not claim. But if it is claimed here na, along with loss of profit. Understood? Everybody? So then that firefighting expense should be added to gross claim. Will be added to and then only will apply average clause. Understood? So in your computation of gross claim, even you will add firefighting expense before you apply the average clause. Understood? Pakka? So these points also you should be knowing. So for computation of net claim, everybody, though we are just given different steps at different points of time, even though it is going to be second time writing, you should not feel lazy for that. Let us now make a comprehensive step by step writing. If you written 8 steps separately, then well and good. If you are not written, it is better that you have these steps in your notebook. Shall we? Steps in computation of claim for loss of profit. Steps in computation of claim for loss of profit. Steps in computation of claim for loss of profit. steps in computation of claim for loss of profit. Step number 1, compensation period. Step number 1, compensation period. Compensation period, under that indemnity period. So first step we have compensation period, under that we have indemnity period, which is actually the period covered by insurance policy. Indemnity period or interruption period. Fire affected period. Whichever is less. Compensation period will be indemnity period or interruption period, whichever is less. Step 2, short sales. Short sales. So what should we take? Sales during corresponding compensation period. Period of previous year. Plus or minus trend, which gives you expected sales during the compensation period. Correct? This is what I have expected if the fire was not there. Expected sales minus actual sales. This is what we call it as short sales. Step 3, gross profit ratio. Will be gross profit by sales into 100. Gross profit equal to net profit plus insured standing charges. Based on previous year information. Gross profit equal to net profit plus insured standing charges based on previous year information. Step 4, GP on short sales. Can you turn this page? Step 4. GP on short sales will be short sales into gross profit ratio. Step 5. GP on AAT adjusted annual turnover equal to annual turnover plus or minus trend. Annual turnover plus or minus trend. Question arises, what is annual turnover? Annual turnover equal to sales during the trend. What you consider for the purpose of short sales, same trend only here also consider, no separate trend and all. Understood? So sales during 12 months immediately preceding the date of fire. Sales during 12 months immediately preceding the date of fire. Everybody? Okay. So annual turnover you will identify, plus or minus trend you will get adjusted annual turnover. Now GP on AAT equal to AAT into GPR. Same GPR only, no different GPR and all. Same means whatever you applied for short sales, same GPR you will apply. So first annual turnover, then adjusted annual turnover, then apply GPR. You will get GP on, keep that amount ready. GP on AAT ready before you proceed with IWE claim. Understood? Step 6, claim for IWE. Step 6 will be claim for IWE. Step 6, claim for IWE. Now please listen. Claim for IWE. We have IWE into GP on AAT divided by GP on AAT plus uninsured standing charges GP on RETA, that is reduction in turnover avoided. Additional sales, layman's understanding, additional sales attributable to additional expenditure. Everybody? Actual IWE. Since I use the term actual IWE, immediately students are misunderstanding. There may be some difference between this IWE and this actual IWE and all. Both are same only. We are telling it is the actual amount which has been spent. Understood? So this is how the least of the above will be the claim. least of the above will be the claim. Can you turn this page? Step 7, gross claim. Step 7, gross claim, which is GP on short sales plus claim for IWE minus savings in insured standing charges plus firefighting expenses. Average clause will be applicable if the profit is underinsured. Average clause will be applicable if the profit is underinsured. Underinsurance refers to the policy amount being less than GP on AAT. If average clause is applicable, net claim is computed as follows: gross claim into policy amount by GP on AAT. If average clause is not applicable, then gross claim equal to net claim. Calculate the amount of claim if sum insured is rupees 10 lakhs, rupees 7,50,000 from the following data. Date of fire 1/3/2013. Gross profit loss during claim period 2,80,000. Special circumstances clause provides for increase in turnover by 10%. Turnover from 1/3/2012 to 28/2/2013 44 lakhs. Agreed GP ratio 20%. Net claim for increased cost of working is 50,000. You are expected to compute what? Claim. Under two options. If the policy amount is 10 lakhs, policy amount is 7,50,000. So there are two questions in question number 17. Understood? The first thing that we will compute is the gross profit on short sales is our target. The first 4 steps is target is that computing gross profit on gross profit lost during claim period. So answer to step number 4 is given. Are you following this? Everybody. Then we will find out GP on AAT. Primarily GP and AAT is required for two reasons. One, we should computation of IWE. Please respond. Then for deciding whether average class applicable or, so anyway GP and AAT you should find out. Please respond. Now listen carefully. Then step number 6 is IWE, where we have three workings, but those workings not required. What is given is claim for increased cost of working, not about expenditure incurred. What is given 50,000 is claim for increased cost of working. Please understand that is only an answer to step number 6. It is not that increased cost of working is 50,000. Spending is not 50. Claim is 50,000. Could you appreciate that? That point you should be knowing. So thereby, and no savings in insured standing charges given. So thereby directly we can proceed with gross claim. So actually this is a problem involving last two steps only. Gross claim and net claim. This is a problem involving just gross claim and net claim. Are you following? Yes, sir. Answer சொல்றீங்க. Okay, I got doubts. So thereby you should know the question, impact of question. Just because of now we wrote with a lot of difficulty 8 steps, don't write compensation period and then struck up. 2 periods not given. So you should know how to proceed with the problem. So here what is required is claim. In the computation of claim, we will directly go for gross claim. Question number 17. Gross claim. GP on short sales. How much? 2,80,000. Claim for increased cost of working 50,000. There is no savings in insured standing charges. So gross claim is 3,30,000. Everybody? We should compute next GP on AAT. GP on AAT. For that first, annual turnover. Annual turnover. That is 1/4/2012 to 28/2/2013. 44 lakhs plus increasing trend at I'm sorry. 4,40,000. So 48,40,000 is called adjusted annual turnover. Next, GP on AAT equal to AAT into GPR. What is AAT? 48 lakh into 20%. 9,68,000. Shall we? Now only we are going to the core part, answering the question for case 1, case 2. Can I turn this page? Can I turn this page? So case 1. Policy amount how much? Policy amount of rupees 10 lakhs is greater than GP on AAT of rupees 9 lakh 68,000. Therefore, average clause is not applicable. So net claim equal to is nothing but the gross claim, that is 3,30,000. Claim amount is only 3,30,000, not 9,68,000. Policy amount of rupees 7,50,000 is less than GP on AAT of rupees 9,68,000. Therefore, average clause is applicable. So net claim equal to gross claim into policy amount by GP on AAT. That is 3,30,000 into 7,50,000 by 9,68,000. 2,55,682. Any doubts that you have, please do raise them. From the following information, compute the amount of claim under the loss of profit policy. Yes, sir. We started problem, I told you immediately you should come back to the normalcy. Indemnity period 6 months. Reason for damage due to fire accident on 1/3/2014. Period of interruption 1/3 to 31/7/2014. Accounting year is calendar year. Gross profit ratio 30%. Savings in insured standing charges 6,774. Increase in cost of working is rupees 20,000 for 80% of the turnover during the construction period. No clause for upward or downward trend. Turnover for the year ended 31st December 2014 5 lakhs. Turnover for the year ended 1/3/2013 to 28/2/2014 5,20,000. Turnover for the period 1/3/2013 to 31/7/2013 2,60,000. Turnover for the period 1/3/2014 to 31/7/2014 1 lakh. Uninsured standing charges rupees 25,000 and net profit 90,000. The requirement is very simple. Compute the amount of claim. Now 8 steps. Yes, you're trying. So please suspend your working or please stop talking. $38,462. 420, yeah. 420, yeah. 420 answer, okay. So short sales. Sales during corresponding compensation period union, right? Sales for the period or sales during 1/3/2013. This is the compensation period exactly the previous year to 31/7/2013. How much? 2,60,000. Trend adjustment not there. Thereby we expected 2,60,000 minus actual sales. This 1/3/2014. My dear friends, no doubt. Now you are supposed to listen. The moment I have started teaching, all your teaching should be stopped. Parallel teaching should be stopped. Listen here one. All your doubts will be solved here. 1/3/2014 to 31/7/2014, which is given the question. They wanted you to identify. Here it was 2,60,000 given, then it is given as 1,00,000. So thereby, this is what I made in the previous year. If fire occurred, I would have expected during the current year also 2,60,000 only. Correct? But because of fire, I could make only 1,00,000. So that amount I will reduce. So that I will get how much sales I have lost. Short sales. How much? 1,60,000. Don't add. $1,60,000 is the short sales. Everybody?
Yes, sir.
Okay. Now for the purpose of gross profit ratio. Third step. Step number 3 is gross profit ratio. Step 3 is gross profit ratio. Gross profit ratio, it is given, but that gross profit ratio to be taken as trading gross profit. Understood? So here listen, my dear friend. Not allowed. I'm just giving you complete freedom and allowing you to try. I understand that's a best way of learning. The moment somebody started taking class, thereafter no more classes, no more doubts. Whatsoever be the discussion, only after my discussion. So when freedom is given, that shouldn't be exploited. Understood? I'm just giving you. You can't talk because when you're doing problem, maybe small petty discussions. But the moment lecture started, then immediately your attention should be here only. Please don't do that. And more than copying also. At that time copying, at that time correcting. Instead listen carefully. So if you have committed any mistake also, still okay. But then your full focus should be on to listening and receiving. Is there any additional inputs? What I have not thought of, sir, telling. Maybe I would have got the answer. Maybe some inputs. Had this been given like that, that was something like that, and all discussion will be there. So you should not miss out the discussion. That is for which you have paid the money. Correct? Not for simply copying the solution. For copying solution, you can buy 500 rupees textbook. At home, simply keep on copying. There are so many good textbooks available. So you are coming here to learn something extra, additional. Understood? So thereby, that time you should be making yourself utilizing such opportunities. It's for your benefit, only I am telling. So gross profit ratio. So gross profit by sales into 100. Number of times we repeated that. It is relation to previous year, not previous immediate 12 months, previous accounting year. The fire actually occurred on 1st of March, 1st of March 2014 and they are following calendar year, which means in the year 2013 that GPR will be computed, correct? So we will be taking gross profit ratio for the year 2013. Further I require net profit of the previous year and insured standing charges. Net profit was given 90,000, correct? We have also given what is uninsured, but I want insured. So what I can do is take the trading GP, net profit given, trading GP and NP is, if the difference between trading GP and net profit is total standing charges, of which this much is uninsured, the balance is insured. That way we can easily take out net profit plus insured. The other way is GP minus uninsured. But we don't want to express it like that. Understood? So thereby let us take this way. It is sales of 2012. 13. How much? 5 lakhs. Everybody, gross profit ratio or gross profit, trading gross profit at 30%, 1,50,000. Net profit given 90,000. Everybody, so total standing charges 60,000 minus uninsured standing charges 25,000. So remaining is what? Insured standing charges. GP equal to net profit plus insured standing charges 90,000 plus 1,35,000. 35,000, 1,25,000. GPR equal to GP by sales into 100. 1,25,000 by 5 lakhs into 100. 25%. So once we get this, step number 4. GP on short sales. Which will be short sales into GPR, that is 1,60,000 into 25%, 40,000. Oh, if there is anybody to take down, please take down. Step number 5. GP on AAT. First, we will work on adjusted annual turnover. Everybody? Adjusted annual turnover for the annual turnover, that is from 1/3/2013 to 20/2/2014. 5,20,000 plus or minus right, not there. Thereby 5,20,000. Everybody? Yes, so during the fire affected period, how much sales you have made? 1 lakh. During the fire affected period, you have made sales of 1 lakh. Anyway, now listen. So GP on AAT will be 5,20,000 into 25%. How much? 1,30,000. Step number 6. Claim for IWD. increased working expenditure into GP on AAT divided by GP on AAT plus uninsured standing charge. That is, what is the expenditure we have incurred? What is the expenditure incurred? Expenditure incurred is 20,000. 20,000 into 1,30,000 divided by 1,30,000 plus 25,000. 16,770 gross profit on reduction in turnover avoided. That is 80,000 is the RETA into 25%, which is 20,000. Actual IWE 20,000. Some of them without knowing also RETA, they got the answer correctly. Additional sales arising from additional expenditure is called what we call as RETA. Everybody? Yes, it's given that additional expenditure, for what purpose we are making additional expenditure? To make additional sales. Correct? Yes, now we know that sales is already made. We can't increase further sales. Sales is already made. How much sales we have made? 1 lakh. How much sales we have made? 1 lakh. Everybody? Expenditure incurred how much? Out of 1 lakh, either entire 1 lakh is because of expenditure, or out of 1 lakh maybe a significant portion is because of expenditure. Correct? Everybody? If nothing is mentioned, I will assume that entire 1 lakh is because of expenditure. In this question it is given. Now understand the meaning of the wording. Many times it is confusing. Rupees 20,000 increase in cost of working. Is this one? Open your mouth. Increase in cost of working. For 80% of turnover during the construction period, during the fire affected period, during the reorganization period. Correct? So how much sales you have made during the period? 1 lakh. So out of 1 lakh, 80% was made only because of this expenditure. Everybody, out of 1 lakh, 80,000 worth of sales was made because of this expenditure, and thereby the 80,000 is called the reduction in turnover avoided. We appreciate that. Everybody, so increased cost of working is rupees for 80% of the turnover during construction period. So which means during the construction period you made a sale of 1 lakh. Out of the 1 lakh, 80,000 was possible only because of this. So now can I ask you one more question? If this expenditure was not incurred, how much would have been the sales? 20,000. If I didn't spend this money, sales would have been 20,000. By spending 20,000, sales became 1 lakh. Correct? But the RETA is how much? 80,000. Everybody, so expenditure is made to increase sales. That was indirectly given that. So expenditure incurred is 20,000 for the 80% of the sales made during construction period. Could you appreciate, sir? Akka? Therefore, you can identify RETA as 80,000. What is RETA, sir? Additional sales made because of additional expenses. You are incurring the expenditure only to make extra sales. Respond. So sale is already given as how much? Either 1 lakh is only because of expenditure, or maybe out of 1 lakh, yes, portion is because of the expenditure. Either entire 1 lakh is because of expenditure, or a portion of that 1 lakh is out of expenditure. So I have been very clearly given information that 80% of 1 lakh is relating to expenditure, and thereby 80,000 is called RETA. Are you all following? Yes, sir. Yeah. Okay. But anyway, it is not making any impact here because the first computation only giving you the lowest answer, least answer, thereby claim for IWE will be 16,774. Understood? Now next gross claim. Step number 7. Gross claim. For gross claim, it is GP on short sales as computed in step number 4. How much? 40,000, not 1,60,000. Then plus claim for IWE as worked out in step number 6. 16,774 minus savings in insured standing charges 6,774. It is how much? 50,000. Everybody? Yes, sir. Then we have 8 net claim. Net claim. For net claim, policy amount. How much is the policy amount? 1 lakh is less than GP on, because what is GP on AAD? 1 lakh 30,000. Therefore, average class is, do you have firefighting expense? So thereby net claim equal to gross claim into policy amount. GP on, thereby gross claim, which is 50,000 into 1 lakh divided by 38,000. That's all. If you have any doubts, please raise. Question number 19. After that, break will come. So question number 19. This is only last 3 class. We are repeating. Every time we are repeating. GP or gross profit ratio will be found out only based on previous year. It is not based on the current year. Current year information is not available. Gross profit ratio, net profit, all information will be available only from previous year. Current year is fire affected period. We will give reliable information only in relation to previous year. If there is some increase or decrease happening, then we will adjust it. But otherwise, GPR of previous year is the GPR of current year. For claim, are we taking current year GP or previous year GP? This GP represent current year GP or previous year GP? Current year GP. The ratio is what we are finding on previous year. The moment the ratio is applied on current year sales, it is current year GP only. Ratio will not change from time to time. Ratio will not change from quantity to quantity. If I compute ratio for 10 units, the same ratio only will be there for 25 units. The same ratio only for 250,000 units. Correct? Please respond. I compute ratio on one amount remains, the same ratio only will be continued for any amounts for that matter. Ratio is not based upon the quantity or period. Ratio of previous year is the ratio of current year. Everybody? Yes, sir. Question number 19. Step number 1, compensation period same. Everybody? Step number 1, compensation period remains the same. Step 2, what is the step 2? Short sales. Fire occurred on the same date, everybody? Like the previous question, thereby I am not doing that again. Short sales. Sales during 1/3/2013 to 31/7/2013. 2 lakh. Now in this problem additionally we have trend at 15%. 31,500. So we have 2,41,500 minus actual sales. Actual sales during 1/1/2014 to 31/7/2014. How much? 1/3/2014 to 31/7/2014. 75,000. 1,66,000. So compensation period and then short sales. Gross profit ratio. What is required is net profit and insured standing charges. So here they have given that gross profit equal to, only when it is not given we require some other information. So net profit is given, how much? Net profit given, given, how much? 70,000 plus insured standing charges, which is given as how much? 50, totally 64,000. Respond. 8,000 is uninsured and thereby 56,000 is insured standing charges. Totally how much? 1,26,000. So gross profit ratio equal to gross profit by sales into 100, that is 1,26,000 by previous year, previous accounting year, 4,20,000 into 100, 30%. Step number 4, gross profit on short sales will be short sales into gross profit ratio, that is 1,66,500 into 30%, 49,500. 49,000. Then we have GP on AAT. Annual turnover 1/3/2013 to 28/2/2014. How much? 4,50,000 plus trend at 15%, 67,500. Total amount will be 5,17,500. Next, GP on AAT is 5,17,500 into 30%. 1 lakh 1,55,250. Step number 6. Claim for increased working expenditure. First one, IWE into GP on AAT by GP on AAT plus uninsured standing charges. That is, what is the amount spent? 6,000 into 1,55,000 divided by 155,250, 8,000. 6,370 GP on Rita. We know that expenditure incurred. We also know that sales were made. But I want one more information, that what would have been the sales if this expenditure not incurred. So nothing is mentioned, correct? And thereby we treat that as 0, and thereby Rita will be entire sales. I repeat, since no breakup has to given that how much of the sales relating to expenditure, we normally assume that entire sales is possible because of entire sales is because of expenditure, and thereby entire sales will be taken as Rita. Understood? So how much is that? 75,000 into 30%, 22,500. Actual expense 6,000, least of the above is rupees 6,372. Gross claim. GP on short sales. GP on short sales, how much? 49,000 plus claim for IWE 6,000 minus savings in insured standing charges 25, 53,800. Net claim policy amount, how much? 1,24,000 is less than GP on of rupees 1,55,000. Therefore, average clause is applicable. So net claim equal to gross claim into policy amount by GP on AAT. That is 53,800 into 1,24,000 divided by 430. How many of you got this? Question number 20, page number 10. On account of a fire on 15 June 2014 in the business house of a company, the working remained disturbed up to 15 December 2014, as a result of which it was not possible to affect any sales. The company had taken out an insurance policy with an average clause against consequential losses for rupees 1,40,000, and a period of 7 months has been agreed upon as indemnity period. An increase of 25% was marked in the current year sales as compared to last year. The company incurred an additional expenditure of rupees 12,000 to make sales possible and made a saving of rupees 2,000 in the insured standing charges. Ascertain the claim under the consequential loss policy, keeping the following additional information in view. Actual sales from 15 June 2014 to 15 December 70,000. Sales from the corresponding previous year 2,40,000. Net profit for the previous financial year 80. Insured standing charge for the last financial year 70. Total standing charge for the last financial year 1,20,000. Turnover for the last financial year 6 lakhs. Turnover for one year 16 June 2013 to 15 June 2014, it is 5,60,000. So these are the informations are there. So compensation period. Indemnity period of 7 months. Or interruption period. Interruption period of 6 months. Next we have short sales. Sales during 15/6/2013 to 15 December 2013. How much is that? Corresponding compensation period of previous year 2,40,000. Is there any trend given? Trend. At how much percentage? So 60,000. So 3 lakhs is the expected sales. Minus actual sales. How much? 70,000. Okay, fine. 2,30,000. 2,30,000 is what sales? Short sales. Short sales is 2,30,000. Step 3. Gross profit ratio. Gross profit ratio. For that, gross profit equal to net profit plus insured standing charges. What is the net profit? 80,000 plus insured standing charges 70,000. So it is 1,50,000. Gross profit ratio equal to gross profit by sales into 100. That is 1,50,000 by how much? So please respond, sir. 6 lakhs into 100, 25%. So please stop talking. Okay. GP on short sales. GP on short sales will be short sales into gross profit ratio. How much is short sales? 2,30,000. Two lakh 30,000 into 30%. 25%. How much? 57,500. Step number 5. GP on AAT. Gross profit on AAT. It is firstly annual turnover. Annual turnover from 15 June 2013 to 14 June 2014. Correct? Any sales given? 5,60,000. Other day going to change it. It's okay. 5,60,000. அது பெருசா பார்க்காதீங்கப்பா. 5,60,000 plus trend at 25%. 1,40,000. It will be 7 lakhs. Right? Now GP on AAT. GP on AAT will be AAT into GPR. How much is AAT? 7 lakhs into 25%. 1,75,000. Next, step number 6. Claim for IWE. Claim for IWE. A. It is actual IWE into GP on AAT divided by GP on AAT plus uninsured standing charge. What is actual IWE? 12,000 into 1,75,000 by 1,75,000 plus 50 9,000. அது வேண்டாம், ஃபைன் விட்டுருங்க. இப்போ லேக்ஸ் அந்த மாதிரிலாம் இருந்தால் you can put points, decimal and all. When it is already given in expanded version, then paise you leave it. Understood? So paise will not be transacted. So you need not be providing 9,333.33 and all. GP on Rita. So no breakup given. In that case, entire sales will be taken as what? Rita. So 70,000 into 25%. 17,500. Actual IWE. Least of the above will be the claim. That is 9,333. All these discussion. First of all, you should understand that insurance company doesn't expect you to take policy for the previous year. Suppose you are going to take a policy for the year 13-14, you take policy when? Completion of 13-14 or before 13-14? Before 13-14. Correct?
Yes, sir.
Respond.
Yes, sir.
So thereby what you should have done is you should have taken policy for the profits of 13-14. In other words, it is profit on sales that will be made during the year 13-14. You are taking policy for the year 13-14. Please respond. When you are taking policy for the year 13-14, it is for the profit that will be earned on sales of which year? 13-14. Everybody. So how to project that? So for us, what information available? We have the past information only. Correct? Respond. Insurance company, business enterprise is expected to take policy for the period which is covering the period of current year as well as post fire. Correct? The profit for the entire year for which insurance is expected to be taken. It is not profit for the compensation period. It is not for the profit for the indemnity period. For the entire year you should take policy. And it is before fire profit or after fire profit? After fire profit. When I say profit on the date of fire, it is after the fire. How much you are expected to last? Please respond. So for that you are expected to take insurance. So what we will do, we will project the profit up to the date of fire, which is actual. Correct? And then based on the trend, we are converting the same sales in terms of sales after fire. We will work out the sales up to the date of fire, which is actuals or estimated. Which is by applying trend, we convert such sales in terms of future. Are you following? For which you are expected to take what? Policy. Understood? So net profit, insured standing charges and all you are considering for previous year. Say based on some information you are considering profit ratio. Correct? That profit ratio of previous year is the profit ratio of current year. So don't think that we are taking only previous year information for the claim. We are actually taking current year information. Once the ratio is worked out, the ratio is applied on the current year profit. Ratio is applied on the, and what is resulting is current year profit and not previous year profit. Could you appreciate that? So we are working out for what profit should have been insured by business enterprise. For that only we first compute the actual sales till the date of fire, and by considering trend we are just converting exactly the sales, the same 12 months after fire. Correct? Tilting the 12 months exactly after fire. Are you following this? Everybody? And that also why we are doing means we don't know when actually the policy was taken. Nobody will take, it doesn't mean that everybody will take policy at year beginning. Correct? Please respond. Yes, so some may take policy on 5th May. Then for them the policy is applicable from 5th May to next year 4th May. Are you following? So thereby only what we are doing is up to the date of fire. So as if we are giving the effect, since the information is inadequate, we will just make out the point this as if the policy is operative just from one day before the fire. So thereby what do? We will take actual sales till that date, apply the trend, convert exactly in terms of future year. Understood? 12 months after fire, for that amount sales we are projecting and we are applying gross profit ratio, for which we are expected to take Insurance policy. We should have taken policy further. Whether you are taken or not taken, that is a different issue, correct? So it is not that business enterprise. Now in real happening, I will tell you how the business enterprise should take a policy. They should take the current year sales or previous year sales, correct? Then based on the trend or some projection, they should estimate what should be the or what will be the sales of next year. And for that sales, what is the profit expected to be earned? And for this, they will take insurance policy. Are you following? This is practice. But for computation, we don't know when policy is taken. So thereby, what do? We take the actual sales till the date of fire. Then plus 10 or minus 10, we'll get the 12 months immediately after fire, for which insurance should have been taken. This is the point. Everybody? Pakka? Okay. So annual turnover is the actuals up to the, by applying trend, we are just converting the 12 months after fire, correct? For which insurance is expected to be taken. If the date and all given, crystal clear, given all information available, we don't do all these things. Are you following? In some other problem, we may not take the same 12 months and all, we will take some other period that we will demonstrate through that particular question. But normal convention practice is like this only we will be trying, correct? Because we know the actual sales still date of, which is normal sales or abnormal sales? Normal sales up to the date of fire, and then by applying trend, it will be converted post fire period sales. For that, you should have taken insurance policy. For that, you should have taken insurance policy, and accordingly, we will decide whether underinsured or overinsured. Understood? Now, coming back to this problem, step number 6 over step number 7. Step number 7, it is gross claim. So, gross claim will be GP on short sales. How much? 57,500. Claim for IWE. How much? 9,333. Do we have savings? Oh, savings irukka. Savings in insured standing charges. 2,000. 64,833. Now, net claim. For net claim, it is policy amount of rupees 1,40,000 is less than GP on AAT 1 lakh. Therefore, average class is applicable. So, net claim equal to gross claim into policy amount by GP on AAT. 64,833 into 1,40,000 by 1,75,000. 66.467. This is 4 by 5 you take, or you do whatever be the case. In the range, it is correct. 65, 66, 67, all correct. 21 is exactly gifted. It is already solved. Question number 21 is already solved. It is just the repetition of 19. 21 is exactly 19. But what is policy amount there? 1,24,000. Inga vandu policy vandu 1,25,000. Actual turnover how much? Actual turnover. Inga vandu last problem it was 75. Here it is 80,000. Like that, 1 or 2 numbers only changed. Otherwise, 90% of the questions have the same numbers. Correct? So you can try this as an optional basis. If you want, you try and have a practice. Correct? The real gift is 22. This is optional one. The real one is 22. Now listen. From the following details, calculate consequential loss claim, date of fire 1st September. Packing la pannama, listen to the problem. Focus. I told her focus immediately onto packing. Indemnity period 6 months. Stop talking. Period of disruption 1st September to 1st February of next year. So September, October, November, December, Jan 5 months. Sum insured 1,08,900. Sales were rupees 6 lakhs for preceding financial year ending 31st March. Net profit for preceding year given. Insured standing charges given. Uninsured standing charges given. Turnover during the disruption period 67,500. What is the sales? That actual sales. Turnover during 12 months immediately preceding the date of fire. It is annual turnover, not AAT. Standard turnover for corresponding month 1st September to 1st February. Turnover during the corresponding months of previous year. How much? 2,25,000. Increase in the cost of working expenditure. Not working capital, working expenditure. How much? 12,000 with a saving of insured standing charge rupees 4,500 during the disruption period. Reduced turnover avoided through increase in working expenditure. What is that? RETA. Special clause stipulated increase in rate of GP by 2%. That is the only uniqueness in this question. You got increase in rate of GP 2%, similarly increase in turnover by 10%. Are you following this? So you will find out rate of GPR, then plus 2%. So it is not 2% on rate, it is that percentage plus 2%. Right?
Thank you friends. OMSAI Bhojanapalli.